Let's get today's show started. It's the second trading day in September. Hello, everyone, and welcome to Frontier Opening Bell. I am Bosin Omofai, and my team today, Chinma Ukadike, who is the consumer goods analyst at Vetiver Capital Management, Ali Kansachu, CEO and founder, Rich Frontiers Management, and Ayode Giebro, the CEO and charter trader at Afrinvest Securities. Good morning to three of you. Thank you very much. We appreciate your time.
Morning, Bosun.
Thank you. Quite a bit of grounds to cover, so let's hit the ground running. As the saying goes, look at the Pan-African markets. The South African bulls eke out 0.81% after a decline on Friday and on Monday to end August and start the new month. Kenyan markets 0.37% positive. Egyptian stock markets bucked the trend 1.14% negative. The Ivorian market came in the composite index 130.05 negative 0.4%. Nigerian stock market went up 0.34%. A big gains in the banking and insurance sector as well as consumer goods led by Nigerian breweries. I'm sure Chima is angling to take us through that. But again, we have quite a lot of stories within the banking space as well in Nigeria, a bit of a rapid fire by the central bank. Let's start with East Africa as always. Checking through some of the top stories. Kenya's inflation unchanged at 4.4%, but unemployment is here, 10.4%. That's quite huge. About 1.7 Kenyans are said to be out of work. Meantime, Reuters reported yesterday that emerging markets and frontier markets countries are running out of the firepowers, which we call the FX reserves, to battle COVID-19 as well as the currencies. Ugandan banks are hedging on certain credits towards the end of the year, so they are piling into treasury bills, which volume now up nearly 40%, as you can see, the 38.2 according to July data. And the Bank of Kigali has a new digital director, Nigerian-born Obina Okwani is the head of that department. Ali, let's go with Kenya's unemployment. I'm really interested in that, how we come about this figure and what that means for this second round of lockdown that President Kenyatta has announced.
So you're absolutely right. I mean, for most of Africa, this has been more an economic emergency than so far a medical emergency. And this is the official unemployment numbers. So it's a pretty big number, any which way you care to cut it. And I actually think it's a little bit higher than that. So, this is evidence of the underlying hit. I saw an interview with the Ghana finance minister yesterday on Reuters saying it's going to be with us for 3 years. Yes. This is evidence of how dramatic the economic shockwave is, not only in Kenya, but this will be replicated across the continent from east to west and north to south. In Kenya's case, you can imagine where the big hits have happened. Tourism, we had our airports closed for a long period of time. It's unclear to me that there's any recovery this year and in the first half of next year, unfortunately. We know that in tourism, you have a big chain effect. It's not just the hotel, it's the people selling into that hotel, curio sellers, it's game park drivers, it's all kinds of people. You can also imagine entertainment. With the lockdown, we have a lot of bars and a lot of restaurants. These guys would probably laid off a lot of folks. And evidence is also that many of the corporates have had to trim the payroll. So it is a big hit, Barson, I'm afraid. There's no way we can massage it. And it's something that's probably a symptom of a sub-Saharan African problem right now. Inflation, of course, in such an environment is going to remain benign, 4.4%. And of course, Kenya has good supply of food, which is what is the intractable problem for some other African countries. Reserves running out for many emerging markets and frontier markets fighting COVID. To give you an example, Kenya ran down reserves to the tune of $500 million in the last 5 weeks alone. That's about 7.5% of our total reserves, and that was in fighting, any weakening in the shilling. So we've spoken about Zambia, which is probably the most egregious example if you take a continuum, but this is again a problem across the board. And I think, what it tells me is a lot of these central banks who have been playing in the foreign exchange market should stop immediately, because it's just going to be throwing good money after bad, frankly, and allow their currencies to go where they will. I tend to find, and I think this applies to Nigeria as well, it's a losing battle. It really is. You're better off doing what Egypt did, allowing a big adjustment, making it so cheap everyone wants to pile in, and then it finds its fair value. To be afraid of that initial adjustment, I think, is a mistake. Ugandan banks hedging uncertain credit via T-bills nearly at 40%. Everyone is doing this. All the commercial banks on the continent are not lending. They've pulled their horns in, and they're basically been buying T-bills, which are considered risk-free on their balance sheet. Interesting announcement. Kigali has always been a magnet for African talent. They don't have that sort of a false patriotic idea that only their own nationals should have certain jobs, which I think is something good about President Kagame. He believes in the African human capital. That's evidence of that. And of course, it's also evidence of the fact that the key role today within banks is this digital director role, because otherwise you're going to have all these fintechs eat them for lunch. And it'll be interesting to see what strategies Obinna Ukwani is going to deploy in Kigali.
Thank you, Ali. We'll take the banking story forward because of the numbers that were received after closing hours yesterday from one of Nigerian tier 1 banks that hadn't reported up to this point. About 4 to 5 Nigerian banks have said they are looking for, they've got an extension to release their first half of the year Q2 numbers towards the end of September. But in the evening, we got UBA. So that's part of the Nigerian market story. Again, it's as big as this can get. The earnings came in, and analysts are pouring over that. Meantime, speaking to the currencies that Ali mentioned a bit earlier, Rand Merchant Bank yesterday says many African local currencies have normalized +1 or -1% against the USD. The trend will continue into September before the higher volatility expected around the US elections. The US presidential election is Tuesday, the 3rd of November, is now considered a high risk, a caution for the markets towards the end of the year. This is being talked about by JP Morgan, by London Stock Exchange. Others are talking about it. In Ghana, 4 of the 50 closed fund managers have taken the Securities and Exchange Commission to court. They want a reversal of their operational licenses. And of course, Nigeria's PMI retraced slightly to 52.3 in August from 52.8 in July. Ayodele, I want to start with you, but let me allow Chima Okadike to speak to the Nigerian story regarding yesterday's trading day for the consumer goods space.
Thank you very much, Basim. So yesterday we saw that sentiment in the Nigerian Stock Exchange was quite bullish across several sectors, because save for the industrial goods sector, which saw a negative performance yesterday, all other sectors closed in the green. We saw the banking sector close up, consumer goods sector, which has been going that way for a while now, over the past 3 or 4 weeks. We had said that we believe this is because of the changing sentiments of consumers in the economy, and investors that are really pricing that into expected performances from these consumer goods companies. We've also been seeing good performances, increased positive sentiment for the banking sector, which was positive expectations for the much anticipated delayed tier 1 results for their H1 performance. We saw UBAs yesterday. UBA also increased by about 4%. The investors we're very much interested in the stock. But I think that going forward, due to the results they released yesterday, I think it was after trading that they released their results. So we should see that retrace in today's session, as investors may not be too happy with the results they declared. So we saw that UBA declared 22% decline in PAT for the year, even though they had been able to record is a 2% increase in gross earnings, majorly driven by increased impairments and increased OPEX costs, like we saw in their results. However, one positive thing we see that may affect UBA in today's trading session is the declaration of a 17 copper dividend, a H1 interim dividend, which is just slightly lower than what they declared for last year. And when we look at their dividend yield, with that dividend declared is about 2.5%, which is quite good when you look at the returns you can get from the comparative fixed income market. So I think that maybe that is what will stabilize the negative sentiment we expect to see on UBA today. Overall, we think that we should see some mixed sentiment in the banking sector. If not positive, we should see some mixed sentiment in the banking sector. We expect the consumer goods sector to continue to ride on the positive sentiments that the investors are currently favoring it with, and we expect that to drive sentiment for the rest of the week.
Thank you so much. Give us a sense of where we finished off yesterday. Of course, UBA was the big story. Ayodeji, I want you to weigh into this conversation on the Nigerian space with the UBA earnings and the PMI as well. What's your take on this?
Yeah, I think it was a bit surprising given some of the other banks that have published their results. Though, when you check, this is an audited account, which you place more reliance on compared to those one that's published earlier, which mostly they are management accounts. But by and large, we still use the top line also still was positive. And as expected, impairment charges are increased by about 150% to about 7 billion. So I think investors will be excited that they were still able to pay dividend despite the COVID-19 pandemic impact. And we looking at the valuation multiples, you will still see that it's still trading at very significant discount. So for price to book around 0.4 times. So there's still potential for upside. And I feel investors are also trying to position for the long term. And for some of these high impairment charges that have been booked, some would also be reversed. As we can see, the economy is also moving to the uptrend. So, by and large, it was analyst expectation given what we've seen from other banks. But we'll see how other banks also perform within the next few days, and that will shape investors' sentiments.
Yes, that will shape investor sentiment. Ayodeji, quickly, let's touch on PMI. Let's bring in the Southern African story, because again, we saw ABSA's PMI yesterday. South Africa's August manufacturing data are roaring, 57.3 in August, the month we just finished, against 51.2 in the month of July. This despite Eskom's resuming power cuts after a plant breakdown and the number of South Africa's state-owned enterprises requesting for bailouts, the SABC, the post office, the airport operator, and of course, reports this morning that Eskom's CEO is being asked to go, but is going to get a very hefty, a very nice dozens of millions of rand in a goodbye package. Meantime, Namibia is reporting a credit growth of 2.3% year on year in July. Credit growth is seen at -7% for the year. Zimbabwe has a new stock exchange. The SEC has granted a license to start the Victoria Falls stock exchange. Old Mutual says there's no dividend and gives a warning that the full year 2020 might result in full loss. Ali, the South Africa's PMI How good is this going? Going forward under the lockdown level 2 easing?
So let me explain something from my understanding of PMIs. PMIs are looking at the previous month compared to this current month. So when you are emerging from a lockdown scenario, you're always going to pop the number big time. So I think it's a good sign. It shows you that it confirms the easing of the lockdown. But I think we've got to see a couple more numbers to see whether this is speaking to a V-shaped recovery or not. I personally think that one should not necessarily get too carried away at this point in time. We're going to see a string of eye-popping numbers in the PMIs across the continent as relaxation of the very strict lockdown comes into play, the way I look at it. Let me just touch on Eskom. I saw another report saying South Africa has had the most blackouts in the last 20 years this year. So, you know, this challenge is enormous. This is the most industrialized economy in Africa. And, you know, you can't manufacture when you're suffering blackouts all the time. And this has remained a problem. They need to obviously restructure the balance sheet at Eskom. They need to now get on with a medium-term program to meet the power shortfall. But, you know, they've had intractable challenges in these state-owned enterprises for quite a long time. And it's going to require a dramatic step change in order to get this matter resolved. Your next headline confirms, you know, all these SOEs want to bail out SABC, Post Office, ASCA, and others. I mean, you know, this is another symptom of the African disease, I'm afraid. We just seem unable to run our state enterprises effectively wherever we are. It's highly unfortunate. It really is. And we need to look at how we deal with these things. I think they become entwined in politics. Appointees are people politicians want to do favors for. They're seen as a boondog, and really, you know, these should be the engines of our African economy, and unfortunately they're not. Old Mutual, no interim dividend, EPS loss. Look, they're heavily invested in the continent. This is a recession after 25 years. You would not expect them. They're mimicking what's happening right now across the board in South Africa and in the rest of Africa. And Namibia credit growth at 2.3% year on year. This is, again, something we're seeing across the board. Governments have, you know, everyone's lending to the governments. Businesses are suffering, therefore are not borrowing money. And then your other story about the Zimbabwe SEC granting the license for the VFEX. This is where they want Old Mutual to list. I think they've got to get their house in order before they start getting another exchange up and running. It's going to be difficult to attract anybody right now under the current scenario that has developed in Zimbabwe.
Very interesting developments in Zimbabwe. Chima Okadike, we have a new electricity tariff in place in Nigeria, speaking to electricity development, consumer goods pricing, inflation, factory inflation, PPI, and all of that. What's your take on our electricity new tariff hike that the discos are pushing out?
I think that is very much necessary. We know that one of the problems that is facing the electricity, the power sector, is that they are unable to charge cost-reflective tariffs, and they're unable to make their own mark in the industry as they should be able to. And we know that one of those problems has been impacted by the fact that they do not have many customers do not have meters that they can use to charge those cost-reflective tariffs because they have to use estimated billing for most parts. So I think that while it is good for them to be able to charge higher tariffs that may be cost-reflective, it is also very important that they give their customers meters so that they can charge appropriately, because it works in two ways. If you're able to just use estimated billing, you might still have some leakages if you charge more than a consumer has used. How do you know how much a consumer has used and how to charge appropriately for it. So they might still have some leakages in that sense, or they might be overcharging some consumers unfairly. So I know that the government at some point had made it mandatory that the discos needed to provide meters to these consumers, and then they had to backpedal on that and pause because of the challenges to import such meters because of the COVID-19 pandemic. And then they had now decided that, oh, it was fine, they could now import, but they could now give the meters to the consumers at higher charges. So there's still a lot of challenges facing these discos in this industry, but I think that it's a good step in the right direction.
Thank you. Ayodele, do you think this higher tariff is part of the silver bullet for the Nigeria's very intractable, worse than South Africa if you look at the electricity problems across the continent?
Yeah, I think I quite agree with Chima. We know that the sector has been starved of liquidity, of new inflows due to the non-cost reflective tariff. So for us to move forward, I think we just need to bite that bullet, charge that cost reflective tariff so that we can also attract new investment into that space. They need capital to expand. They need a new injection for them to be able to even increase the operations and be more efficient in delivering power. So I believe with also the initiative of even the initiative of the president on metering, that should also help ease that estimated billing that most people are against.
Well, let's see how it all goes. If a higher electricity tariff will be part of the package to get sustainable electricity within this country that solely needs industrialization at the speed of light itself. Let's talk about the North African market. AZA has appointed the Moroccan-born Mariam Habibi as the new Chief Revenue Officer. AZA is a non-bank currency broker and that does about $1 billion transaction volume every year. That's congratulations to Mariam Habibi there. Meantime, Morocco's trade deficit in at negative 18%. A 5% economic contraction is expected for this North African economy. Deficit 7.5% of GDP. Import-export in the month of July. Meantime, Egypt's money supply, or M2, was up nearly 20% year-on-year in July to about 4.82 trillion. That's a little north, or a little bit of north of 2 billion of modern US dollars. But again, Ali, let me just give you the chance to give us a minute into this Egyptian money supply story as well as Morocco's economic data.
So let me quickly just start with AZA appointing the Moroccan Mariam Habibi as the new Chief Revenue Officer. It's a very interesting business that AZA have got, which is really muscling in on the foreign exchange trade that the big banks hold. I've seen them increasingly pop up, and I would argue that you're probably going to see a big surge in those volumes that they're declaring, and it's an interesting business to keep an eye on. Egypt M2 up 19.08% year-on-year in July. That's interesting, and that's strong double digits. So they're not holding back on liquidity, which is interesting in the context of the currency's behavior, which has been extremely stable. And, you know, there's a lot of faith in their monetary policy. They cut 300 basis points. They didn't do any more. They left it at that. And I think investors in particular feel a degree of comfort in Egypt, which they don't necessarily feel in many countries south of the Sahara. And that's a significant point. Morocco, trade deficit minus 18%, 5% contraction, deficit 7.5%. Imports and exports largely in line. You know, they also run a tight ship. You'd expect, you know, a decline of this sort of magnitude, highly tourist dependent, a manufacturing powerhouse. I suspect this is as bad as it gets, and we're near the bottom here in the Moroccan situation, and we probably get quite a nice bounce into next year as long as the tourism starts to open up a little bit more as well.
We have a lot to talk about tomorrow on the show, but just a quick take on what the outlook is for the Nigerian market for today on the fixed income side. Ayodiji, about 30 seconds, if you can.
Okay. I think today there's really no major problem today. We're expecting that there will be significant maturity tomorrow in fixed income space. But I would also like to just add, discuss on the PMI and what we've been seeing based on the CBN PMI. We have different also firms that carry out their survey. And it's showing a significant improvement. We saw on the CBN PMI for data, that we're almost approaching at 48.5 compared to 44 points in July. And we've seen that improvement in the production level, new orders, they're almost touching the 50 points, showing that things are also picking up. And we're optimistic that even as also they're also planning to, and when most more clubs are also opened up, and conferences can also start to feel that things by end of September, we should see that major improvements in the economy. So, but by and large, it's also going to be premised on the implementation from is on how they can be able to jumpstart the economy.
Okay. Thank you so much for weighing in on the PMI as well. Thank you so much, Chima Ukadike, Consumer Goods Analyst at Vetiva Capital Management. Ali Kansachu, thank you so much from Rich Frontiers Management, and from Afrinvest Securities, Ayodiji Ebo. Thank you to three of you. We appreciate your time on the show today. I'll see you again tomorrow, Thursday. Bye for now, and have a great day.